All right, what is up, everybody? What's up, tycoons? What's up, traders? Super excited for today's video. Going to be starting a new series that I'm doing, going over bond market, right, and covering the bond market a little bit more. All right, we're going to have dedicated videos to different bond ETFs. Let me know what bond tickers you guys would like me to cover in future videos. We're going to go over TNX in today's video. We're also going to take a look at SPXB. All right, this is basically the S&P 500 bond ETF. We're going to take a look at TLT, go over the structure we have on TLT, as well as the tips. All right, we have TIP right here. We have LQD, we have HYG, and we have junk bonds JNK. Now, you can always email me for a one-on-one personal session anytime at zackleytrades@gmail.com, and we can work on setting up a time and scheduling one together. Today's video is sponsored by Simply Wall Street. It's a really great platform, guys. I've used it for a while. Glad to have them as a sponsor. You get a 14-day free trial and up to 40% off for the first 100 people that join. So it's actually really affordable, especially with that discount. And if you're not a pro at fundamental analysis, Simply Wall Street has their pros doing the work for you, and they summarize everything and make it all very simple to understand for beginners, as well as give you guys some nice charts and graphs as well to really help dial it down. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. All right, now we're going to start the video off by taking a look here at the SPXB. All right, now this is the weekly time frame. And the reason we're starting off here is just so you guys can get an overall broad sense of how the bond market is feeling, what it's doing, right? And it really summarizes it very well. If you take a look at a timeline here, basically since the year has started, the bond market is basically flat, right? It's done nothing but stay within this range here. So, whenever I'm looking at some of the other bond tickers, really, we're not going to see a true move in those and get a clear idea of direction until we get a breakout to the upside here or a breakdown to the downside. Right. For now, most of the bond market is still really just choppy and very sideways. When you take a look at more of, the macro structure on things, right? Now, we did have this bearish selling structure here. All right. Really since the peak of 2022, all right, a little bit before then, and then throughout that entire year. And then 2023 here, all right, we've really just been consolidating and, going nowhere. We do have a small demand zone down here. If we do break down, this is an area where I would be targeting. This is about 70.72 all the way down to about 69.5. That's going to be our key major demand zone on the weekly time frame for SPXB. Now, one thing worth noting is we haven't had a true retracement up yet, right? That's what these are, right? So we have the swing high connected to the all-time highs, and then we have it connected down here to our lows. And we see we've had this huge move down. We've retraced. I mean, if we wanted to, we could, I'm sure we did get a 23.6 retracement right here. If we put that on, all right, and we can just slap this on here as well. But the ones that I really like to use the most are the 38.2, 50%, and the 61.8. These are the three most common and well-respected Fibonacci retracement levels. So, you can see that it is a good level right here at 75.61. And if we do get a breakout to the upside, the next target here would be 79.43 for a 38.2% retracement, right? So that's what I'm looking at when it comes to the bond market, basically as a whole and as a gauge to determine, what are some of the other things that maybe we want to look at. Now, the next one that we'll hop into is we're going to hop into the TIPS ETF. All right, so we're going to take a look at TIP. All right, and these are treasury inflation protected securities, right? Now, TIPS completed its bearish five-wave structure, okay, a while ago, and there's a couple different ways that you could look at this, right? Now, we're not going to use the Elliott wave on every single chart right here. We're going to do, a little bit of a mix-up, all right? But, we had the original 1, 2, 3, 4, 5, right? We completed that, and at this point, that's when you should get an ABC correction, right? And so if you take a look, we got an A up, right, and then B down, okay, and then C up right here to our 50% retracement level. Right. So, from that perspective, it does, that's a little bit more bearish, right? Now, some of these charts are more bearish than the others, and some of them are more bullish. When we zoom down to the daily time frame, we can see the structure, a little bit clearer here, right? So, here's that end of our five-wave down. We got an A up, B down, C up, okay? And technically, okay, if this is an ABC correction right here, all right, the one that I just highlighted to you guys where we had the A up, the B down, and then the C up, then we're going to get a new 1, 2, 3, 4, 5 down, right? And, that's a pretty bearish signal for something like the tips. All right, now that doesn't have to happen. All right, we could, after completing this wave 5 here, we could put in some new structures. But if we zoom in just even a little bit more, all right, and we take a look here, we definitely got a 5-wave down, right? One of, more of a micro 5-wave structure down. All right, and it appears to me we're in that ABC correction phase right now, right? We got a 1, 2, 3, 4, 5 down. All right, and this would be the wave 1. All right. And then you would get your wave 2, which is going to be an ABC to the upside. And we do see that, we were, slightly positive today. Okay. And we're, it seems to me like we're up in that A wave right now. 107.78 is a really big resistance level, that we want to get over and basically reclaim. I just want to highlight, some of the different trading opportunities that are available to you guys. And specifically, what I mean by that is I want to highlight this chart pattern right here that we have. This is actually a inverse bump and run pattern indicated by this trend line. And then we have this trend line here. This has slowly become one of my favorite new chart patterns. And, we had the same thing on TLT I covered in a recent video. But you basically have this initial downtrend right here. And then you have this bump in the price, right? So you have the initial downtrend, then you have the bump. Once you break this bump, that's where you get the run, right? And so you get the run up to this trend line. And in a perfect world scenario, you're going to break through this trend line as well and get the full move to the upside. Now, that may not happen. Okay. Oftentimes, whenever I'm trading this pattern, I will start to take profits here, basically at the next trend line here. So if this wants to play out fully, all right, we're definitely going to be coming up to that major resistance level that I gave you guys right around 107.78. When we zoom out a little bit more and take a look at the larger structure, all right, we do have, this nice trend line here on the bottom, this nice trend line here on the top, and it's forming a little bit of a triangle at the moment. So we're going to see where the real breakout or breakdown is going to be. All right. 107.78 definitely seems possible in the short term. Given that it's looking like we're getting an ABC structure up here, that could potentially take us all the way up to 108.46 or potentially even 109.13. We'd have to break this trend line here for us to get up to that 109.13. But when we zoom out and we take a little bit more of the bigger picture, these are some of the higher levels that we really need to get above, really to be bullish. Okay, is going to be 113.27. All right, that is our 61% retracement from the larger highs that we have up here connected down to the lows. So everything really up into this territory, if we were to rally up to here, is still healthy retracement territory to continue the downtrend. That's how you use the fibs. Okay, you use them because nothing moves in a straight line up or in a straight line down. You get a move up, retracement, continuation higher, or move down, retracement, continuation lower, right? And so now that we understand all of this is healthy retracement territory to potentially continue the downtrend. Now, not only can you use the fibs to identify continuation, but you can also use them to identify reversals, right? So, if you move down, retrace, and you start to consolidate and break through those retracement levels, that's how you can spot a potential upside reversal. And so on a shorter sense, if we take this swing high connected down to this swing low, that's where we get these fib level targets from. All right. And if we are able to break out through here via that inverse bump and run, consolidate through here, that's when we could get the breakout. And that also aligns with breaking the top trend line. Okay. So 109.13 is going to be a really important level. If we zoom back in, what we don't want to see is a false breakout, aka a look above and fail, right? So let's say we do continue a little bit of some short-term bullishness, right? And we end up getting something like this where we break out, and instead of retesting here and continuing higher, what happens is we actually look above and fail. This is going to be very bearish and indicate that we're going to come towards the lower end of our range right in through here. And the reason being is because at this point specifically, buyers have the opportunity to show that they're in control of the price action. And if they fail to take control of the price action on a retest and actually fail and we come back down into the range, it's going to show you guys that bears are the ones who are in control. Okay. If we take a look at our RSI right here, the RSI looks really good to me. We actually just broke through a key trend line on the RSI right here. And so now we're going to see if we get that look above and fail. All right, that's going to be bearish and it, indicate that we're going to come to the lower end of this range here. All right, and retest this trend line, or potentially even come down to this demand zone we have here below our trend line, which is going to be 105.12 down to about 104.59. All right. On top of the RSI breakout, we also have a MACD crossover right here with the red line crossing up above on the daily time frame. For the bond ETFs, these MACD indicators have been a really, really useful tool, right? See the MACD crossover here, see the big move down, MACD crossover here, you see the nice move up. And it's been working as a pretty good trading tool and indicator. So if you're bullish on a tip right now, what you're going to want to see is a breakout retest, push up higher. Okay, not a look above and fail. That's going to be a bearish signal to you guys. Let's move on from tips and let's go ahead and take a look at HYG real quick. All right, this is going to be your high yield corporate bond ETF. I know a lot of people like to trade this one as well. All right, and if we zoom out here and we take a look, we have this trend line on the top here that we've tested many, many times, and we're retesting it here again. The reason that this is so important is because the more times you test these trend lines, the weaker they are going to get, right? And so when we take a look here, we can see we tested it over here. We got very close over here, tested it again over here, and we're holding above this gap right here. That's what all of these blue boxes are on my charts. Okay, these are known as gaps. These gaps, they tend to fill about 90% of the time. The big question is when they're going to fill, right? And so, there's lots of gaps up on many of these bond charts. And so if you have patience, there is a strong chance that eventually these gaps up are going to fill, right? The big question is when, as I mentioned, right? If we continue to trade sideways, as we take to look at that SPXB chart, let's just go ahead and draw a vertical line here for, when 2023 started. And you can see that many of these ETFs have really just gone nowhere and have traded really sideways, since that time period, since the year has started. So if we are able to get a breakout, 76.45 is a key level, okay, where we need to be cautious of a look above and fail. If we can get above 76.45, then we have a very good chance of filling the two gaps up and actually getting a 100% retracement, and seeing a strong push up in HYG. All right, remember, this is your high yield corporate bond ETF. One thing that I would pay attention to is I would say your RSI right here. We've kind of been topping out right around this region here lately. Just a very quick rough trend line. If we can really stay above and push up into that overbought territory for HYG, that's going to be a good signal. Okay. You can really tell when we extend it here, when we extend this line. Let me go ahead and use the trading view tool real quick, and we just take a look. All right, you can see we really haven't been able to get even into the overbought territory. We've really just been peaking out here right around 66. And that's kind of been the overbought level on the RSI for the daily HYG chart. If we can get above there, then that's when we potentially could see this breakout here. And the gap up to fill is at 77.04 and then also at 78.25. Now we need to be cautious, okay, because we do have a gap down to fill, right? We have this gap down here. Oftentimes these gaps will act as support and resistance before filling them. And so you can see we're really holding the line right here on this gap. We closed down lower today or previously, and then we wicked down here today, and we were able to push back up higher. If we do break this gap, we have some key support levels here that I go over in a second. One thing I want to highlight is these lines that we see on the chart. These aren't moving averages. These are actually anchored VWAPs. So the purple one is going to be your year-to-date anchored VWAP right now. And then we have the month-to-date anchored VWAP here in yellow. And so this is leaning more towards bullish, right? We're seeing HYG is above the year today and the month today anchored VWAP. Today's Monday at the time of this recording. So the week today anchored VWAP isn't really showing up yet. We just have, one day. So it's going to anchor basically to today. To today's price action when it comes to HYG and really a lot of the other tickers that I'm looking at. 74.49, 74.13, and 73.77. Those are those key levels of support. If we break below there and we end up breaking our bottom trend line here, we do have a demand zone around 73.12 to about 72.59. If we end up breaking below there, then it's very possible and very likely that we're going to come down and retest some of the previous lows over here on HYG. Let's take a look at junk bonds real quick, and then we'll get into TLT next. This is ticker symbol JNK. All right, JNK, also looking pretty nice right here. All right, very similar story with the RSI here. You can see you have this level right around here in the 60s that it hasn't really been able to get up above. That's been acting as the technical definition of overbought, which is 70. So, we're going to see if this thing can push up into that overbought territory and get a nice breakout. We're breaking out of this trend line here that we've tested many times. All right, we tested again over here. We gapped up over the trend line, which is really interesting. And now we're potentially retesting this to push up higher. Keep in mind what I said about that look above and fill, right? If we stay above here and we come back down into this range, it's going to be bearish and indicate that most likely we're going to come back down to the lower end of our trend line here. So let's actually zoom in a little bit more here. All right, we take a look at our MACD. We got a very nice bullish crossover here on the MACD. As I mentioned, these crossovers have been a really effective tool whenever it comes to the bond ETFs. All right, we do have a gap down to fill, so we need to be cautious of this gap down. All right. If anything, and we try to fill this gap, we want to find support here at our anchored VWAPs. If we can do that, then that's when we have a chance of potentially getting a real breakout on the junk bond ETF. But for now, this one is breaking out the most out of really all of the bond ETFs that we're going to be looking at right now. And to me has the most potential. Of course, these are going to be a little bit more risky. If you're not necessarily trying to trade these, but looking to invest in things like this. Now let's go ahead and take a look at TLT. Break down TLT for you guys. Okay, so TLT, we had that inverse bump and run pattern. I actually did close some short positions on TLT that I got into on Friday today. TLT, I guess it actually closed positive on the day. I'm not too sure about that. But it did fall. I had the 102 puts and also the 101.5 put options that expire this Friday. I got into those right around this time period here on TLT, and both of those were in the money today. So went ahead and just took profit on those. Nothing insane. I think I scaled out of them originally like at 10, 15%, 20%, and then closed the last little bit around 30%. But not bad for a little day trade. TLT is the one that I trade the most out of all of these. I don't really trade the other bond ETFs too much, but I know that there's not a lot of good content out there when it comes to, technical analysis for the bonds and for the bond ETF. So I'm going to try and provide that for you guys, and maybe I'll start trading things like HYG a little bit more. Remember to let me know in the comment section some of the different bond ETFs that you guys want me to cover. Okay. There's different variations of these as well. There's like HYGW, HYGH, different things like that. We can start to cover some of those as well. There's leverage ETFs, TMF, TMV, different things like that. Just let me know in the comments. Right here, we had some question marks on our MACD, right? And we're looking to see if we're going to potentially get a buy signal here, right? And if we get a buy signal, then most likely we would break this trend line here, come up to this 102.88 region, and really look to retest that region. You can kind of see the inverse bump and run, right? We have our prevailing downtrend, and then we have this downtrend right here. Okay, and then we break through that. It's a little bit clearer on a 1 hour chart is where I had that chart pattern originally drawn, and we did go long on TLT, and it took a little bit of patience. It was pretty rough, but eventually, those plays did go green. When we look at our RSI right here, one thing worth noting is that we've tested this trend line here on the RSI multiple times. The more times you test the level, the weaker it gets, right? You can see multiple touches over here. We came up to it again. So if we're able to get a breakout and a MACD crossover, most likely, again, we're going to break this trend line here, come up and test 102.88. What's significant and worth noting to me is that we're below the year-to-date anchored VWAP when it comes to TLT. Right. TLT seems to have completed its 5-wave structure to the downside here. We were targeting 98 to about $97, but it seems to have fallen a little bit short of that and completed its 5-wave structure. We'll see exactly if that's true or not. There is a big gap down right here, right around to that $95 region. So we're going to see real TLT fill that gap. when you zoom out a little bit and you take a look at the triangle pattern that we had forming here, you know, it does seem likely that we would get that move to the downside, right? We had the triangle structure here, we got a breakdown, retest, and then if we push lower here, we're going to end up filling that gap. Okay. You know, but that's not to say that that's guaranteed. You know, right now we're very potentially, you know, we're on the verge of a breakout. Right now, that breakout isn't guaranteed. Again, we're on the verge of a breakout. If you wanted to, you could call this a little bit of an inverse head and shoulders here, right? With the left shoulder here, with the right shoulder here, with the head, you know, you could say something like that. You could call this a cup and handle forming right here, right? Here's your cup and here's your handle. And then we get the breakout, okay? And we would be targeting right around here, which is our anchored VWAP. You know, that level is going to be about 103.89. So, you know, lots of potential opportunities here in the bond ETFs. And if you like trading options, like I do, bond market volatility has actually been higher than stock market volatility, right? And I'll just show that to you guys real quick. If we look up move and go to move, all right, and then we throw on the VIX right here, all right, and we take a look at the VIX, we can see which one is more elevated. But yeah, so if you take a look here, we have the move, okay, is actually elevated, more elevated than the VIX, which you don't really see this much, right? I mean, typically, you know, bonds are not going to be more volatile than the stock market. But that's, you know, that's what we're seeing right now. So actually, I want to go into TNX real quick, okay, and take a look at the 10-year treasury. Now, I did a really good video, basically just explaining why I think that, you know, the long-term secular downtrend that we've had in bonds, and really just like treasury yields is over. And I do think that we could see the 10-year treasury go up to about 5.2 potentially, right? And, you know, we have this larger five-wave structure right here. And it seems to me like we got an ABC correction, and we're basically on the verge of getting we have our first wave one up, and we're getting a wave two down right now. And this is why we're seeing bonds start to bounce here recently, is because, you know, as the treasury yields go down, you know, the bond prices are going to go up. But, you know, to me, I'm thinking that we're getting a 1, 2, 3, 4, 5 up. We should be getting an ABC correction here. And then, you know, if we do get that, we'd be looking for a new five-wave structure to the upside that would break this trend line right here. Okay, now we do have this initial bullish divergence trend line here to pay attention to. We're going to be retesting that here soon. It seems like, notice here, we're making lower lows. Here, we're making higher lows. That's a bullish divergence. We also put in a nice rounded bottom here, you know, bottoming signals with the bullish divergence. We got the five-wave structure to the upside. All right, we broke out past the previous trend line. If you wanted to say that, you know, here to here was a little bit of a trend line. Okay. And you know, we basically got a look above and fail right there. All right. And so, you know, like I mentioned earlier, that's usually bearish, but that aligns with the analysis that we'd be getting a little bit of an ABC down before starting the next round of, you know, push to the upside. Now, remember, okay, the Fed has maintained their, you know, stance basically that rates are going to be higher for longer. Right. And, you know, I feel like a lot of people just really aren't processing this, and, you know, the market is pricing in a lot of rate cuts by next year. And, you know, it's not for certain that we're going to see those, right? And they could get more aggressive. Now, I don't think they're going to get very much, you know, more aggressive with their rate hikes. But, you know, I do think that it's very possible that, you know, just treasury yields and rates are going to stay higher, you know, than what people are used to, right? People haven't really been used to this for the past 20, 30, 40 years. And I think that that's where we're heading into right now, is this new environment. When we take a look here at our MACD sell signal, we see the crossover to the downside. We're getting that move to the downside. We'd be looking for some type of a bounce sometime soon, and then another push lower. That would coincide with TLT and JNK and some of those other bond ETFs that we're looking at, getting that bullish breakout to the upside if we start to see these treasury yields go down. But ultimately, I think that it's just a corrective move to the downside to continue, you know, a larger structure. And then after this ABC, we would look for another 1, 2, 3, 4, 5 up, and then get another correction wave, and then another 1, 2, 3, 4, 5 up, and that would put us right around that 5.2% level on TNX. Now, you know, there's a lot of what ifs involved with this analysis, and this is just going to be a guideline that I'm using, but not something that I'm going to follow religiously as the Bible or something like that, right? You have to, be like water, okay? As Bruce Lee says, you have to be like water. You have to change, and you have to flip flop sometimes, okay? It's all about just going off of the data that you have in front of you. The data is going to change every single day. And we just have to do our best to interpret it and see what sticks out to us. This is what sticks out to me, right? It looks to me like we got a very, clear ABC correction right here after a strong, macro 5-wave move to the upside. So I don't see why we wouldn't continue that uptrend. But it's very possible that, we don't, okay, and that we really just consolidate and move sideways, okay, as many of the bonds have done, really going nowhere, since the year has started, really just, TNX is almost at the exact same place, exactly. If we look basically right here at the very beginning of the year, it's almost exactly at the same level. So that's something to keep in mind. Let's take a look at LQD. I don't know if we looked at LQD. So we'll take a look there. This is your investment grade corporate bonds. And LQD is scattered all over with gaps, guys. 3, 4 gaps down. We have one really big gap up right now. It is below the year-to-date anchored VWAP, but it is above the month-to-date anchored VWAP. So, we really need to get above that year-to-date anchored VWAP, get a breakout here. 109.39, 108.42. Those are some really strong resistance levels. Right now, we're holding 107.45 as support. If we break down below there, I think it's very possible we fill some of these gaps, if not all of these gaps. Again, we have that really, really huge one all the way down here to 101.34. Or I guess 101.42 would be the exact level here. Hopefully you guys enjoyed today's video. If you did, smash that like button, subscribe to the channel if you guys are new, and I'm out.